So I think during the course of our last session, we discussed about basis of market structure. We identified the two basic market structure, the two basic structural level we have in the market, which is the highs and the lows. Then went on to discuss about their subcomponents as well, in which we have the higher highs, the higher lows, the lower highs, and the lower low. With that said, today we'll be talking about structural trend, right? The various trend that forms, market as price keep on progressing, keep on moving. Because at every given point in time, the market will always have a direction, and that particular direction is what we regard to as the what as the trend. All right. Now, in the market, we have two different trends when it comes to the first market. Just a way to comment any market at all itself. Let me see. Okay. So, like I said, in the market, we have directions that the market is always going to, which regard as the what as a structural trend. In market, we always have a direction because normally it is our normal life. We all usually still have direction. We don't just wake up one day and decide on a particular this day to buy one particular thing. No, it's because others are interested in it. We have seen it. We have seen others using it. That's why most of the times we tend to buy it as well. So it's more or less by so doing, without us realizing it, we're already doing what we're already following the trend. Safety goes for the market as well. After all, the market is just a copy of or rather it's just representing data of we human transaction, our day-to-day transaction regarding that particular asset. It's just recording it and showing it to us using this chart format. That's basically what the market is doing. So with that being said, we have two major trend in the market, all right, which is the uptrend and the downtrend. Now, remember, I always use concepts of supply and demand in explaining each and every of major things. All right. So we have the demand trend and we have the supply trend. In this case, the demand trend is the uptrend and the supply trend is the downtrend. Just like the name goes, the demand trend is what you want to be saying, in which the market will be what will be trending upward. Now, a trend is different from an impulsive move. All right. An impulsive move is just one move to the upside. Let me say something like this. This is an impulsive move. Just a straight move to the what to the upside. All right. But a trend is the difference between an impulsive move and a trend. A trend always fall back to the what to correct imbalances. Just like that, thereby making a trend stronger than an impulsive move. But the trend, what is the major component of the trend is the impulsive move. Because take for instance, this is the impulsive move, then a correction, impulsive correction, and all that. So they are almost basically almost the same thing, just that trend is far more stronger and trend usually occur on a longer term. All right, on a long term. Take for instance, a market can be trending upward for a period of time, but an impulsive move can just happen once, probably just today, not finish. All right, so that's the difference between a trend and an impulsive move. So this is a demand trend. Now we call it uptrend because, as you can see, it's doing what? It's moving upward, And we use our diagonal trend line in doing what? In identifying trend. All right. Take for instance, there is a trend. Now, which direction is this particular trend having? You can see that it's doing what? It's having an upward direction, moving to the what? Moving to the upside. Now, the same thing goes for, or rather, the opposite goes for the supply trend, in which one will be seeing a sharp move to the downside. All right. So this is your supply trend. This is your supply trend. As you can see, it's having a what? A downward movement. It's moving to the downside. That's why it is regarded as the what? As the downward trend, right? Or the downtrend, anyway, I'm saying one column, or the bearish trend. Remember, this one is also can also be known as the what? As the bullish trend. Why? This one can be known as the what? As the bearish trend. If you want to be more professional when it comes to Forex terms and all that. But with that being said, now let's talk about how does all this our trend comes into place. Like, what is the main theory behind all this our trend? Now, each and every trend don't just happen in the market. There will always be a reason why that particular trend, like there are characteristics that show up in the market that we tell you that okay, this is a what, this is an uptrend or this a downtrend. All right. And so explain those characteristics very well. We make use of the subcomponents of market structure. If you guys remember, I was treating subcomponents of market structure. If you cannot remember clearly, well, go and watch the previous video. The recording is available. I will send it to you guys soon. So when we were taking that one, I made mention of the concept of higher and lower. All right, in which an high can either be like the new structure can either be higher or lower than what than the previous structure. Be it an high, be it a low. The most recent high will either be higher or lower than the previous high. Now, if the most recent high is higher than the previous high, that's where we have the what? The higher high. Then if it's lower, that's when we have the what? The lower high. The same thing goes for the what? For the lows as well. The most recent low, if it's higher than the previous low, that's when we have the what? The higher low. Then if it's lower, that's when we have the what? The lower low. Now, based on this particular concept, this concept of higher and lower, there's another part of it that I didn't explain to you guys during the last class because I was skipping it especially for trend. This one is the one that relates to trend. This is the origin of where this trend starts from. And I will accompany it with the concept of sequence and progression. But before that, let's talk about the concept of higher and lower based on when it comes to trend of a thing. Now, a demand trend makes use of higher. A demand trend makes use of higher, while a supply trend makes use of. Let me just keep this then. This is a demand trend. I said that the demand trend makes use of what? Higher. And the supply trend makes use of lower. Please just bear with me. This is just a little way I can use to explain it to make it much more understandable for you guys. Don't think that probably is much more complex than this. No. So now, what do I mean when I say that? Remember, we have the concept of higher and lower, all right? And now I'm saying that the concept of higher, that's what the demand trend makes use of, and the concept of lower, that's what the supply trend makes use of. Now, the concept of higher simply means that the structures that are forming will be higher than the previous ones. Take, for instance, when we talk about the concept of higher here, we're simply talking about two structures in particular, which are the higher highs and the what and the higher low. That's what you just need to know. That's why we said that we'll make use of the concept of higher. All right. Now, in a demand trend, remember the market is doing what? It's moving to the upside. is having an upward momentum, all right, pushing to the upside. So because of that, what you want to be seeing in the market is the formation of higher, just higher stuff, because it's going high, it's moving to the higher parts of the market. So what you want to be seeing at that point in time is just the formation of higher stuff. You don't also see information of lower. Once you see information of lower, the same means that the characteristics have changed. All right. For a demand trend to be valid, you have to follow the characteristics of the concept of higher, in the sense that you have to be a sequence of higher highs and what? Higher low. Those are the two higher that we have: higher high, higher low. So it have to be higher high, or it have to be a sequence of higher high and higher low. Now, when I say sequence, it simply means that the way at which something forms, all right, like the progression of that particular thing, I keep on forming over and over again. Take for instance, you want to see higher high, higher low. That's sequence number one. You want to see another sequence forming again. The same thing, higher high, higher low. The same thing again, higher high, higher low. The same thing again, higher high, higher low. That's what we mean by what? By sequence. All right. So now when we have higher highs and higher lows forming in the market, that's an indication that okay, market want to do what? Or actually, the first one, the most important one, is the higher high. The higher high is the most important when it comes to the demand trend, because now high is now it dominates for here. You can see now high is they dominate for this particular place. So the most important thing here is what is higher high. So once you see the formation of a what of an higher high, that is the first indication that market is about to do what? It's about to start a demand trend, or is in a demand trend already. All right. Now, the next thing you want to see next is the formation of an higher low, in which instead of price to give you a lower low, price will then give you an higher low, a low that will be higher than the previous low. Once price does something like that, what you should be expecting next is the formation of another higher high, because that is the sequence. Once higher high don't form, higher low don't form, the next one thing you most likely follow that particular sequence: higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. All right. So this is just basically this is the concept of whatever of sequence, in which we have the first ones that we form, and price will continue that particular sequence. And there are just two sequences when it comes to market structure: higher highs, higher lows, then lower highs, lower lows. Those are the two sequences when it comes to market structure, in which the first sequence, which is the higher highs, higher lows, is for the what? The demand trend. And the second sequence, which is the lower low, lower high, is for the what? Is for the supply trend. All right. So please, it's nothing complex. If you think that you are not following up, just rewatch this particular video and you understand far more better. All right. So with that being said, this is how we usually get our supply and demand trend, in which in a demand trend you will see what? You will see price giving us the formation of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. And in a supply trend, market will be giving us the what? The lower high, lower low, lower highs, lower low, lower highs, lower low, lower highs, lower low. All right. So this all what you need to know about the trend of thing. Then the next thing we're talking about is complex market structure, which we talk about the break of structure, and we talk about the market structure shift and all that. Then we talk about the concept of progression in it, because that was we're going to be using. But before that, let's move on to go and identify some of these trend in the market, the higher highs, higher lows, and all that. In this case, let me use all right, this is the 3 hour time frame on USDJPY. So I'll just make use of the daily time frame rather. Now, if you check very well, you can just see that market is already in a what? In a demand trend. So as you can see, we have our first higher high here. Then price did what? Broke that high and gave us the formation of a what? Of a new higher high. Price now did what? Break this high to give us the formation of a what? Of a new higher high. Just like that, that's how markets have been going. So very soon now we should be expecting a what? The formation of a lower high. All right. Expecting the formation of a lower high for market can do what? Continue upward. So this is just a nice example of the demand trend. Now over here, if I go back to the 4-hour time frame, I'll most likely see a sweet example of the supply trend. As you can see, it was at this place the market did what deviated from the characteristics it was possessing before, in which market failed to break above this high, and it was came back to take out this lows. And from that moment onward, market was moving downward. Market just kept on progressing to the downside. So this is a critical example of a supply trend. You can say this is supply trend. So this is how you can identify your demand trend and your supply trend in the market. So let me just do one more example and then we push on. Over here, we can see this small supply trend here, which you most likely see clearly in the words in lower time frame. And then after it, we have this demand trend to the upside. Over here, we have a clear demand trend here. So this is how you can identify the two various trends we have in the market. Now, with that said, let's move onward to our okay, just before that, there's a special case that I want to actually explain to you guys, just in case you come across such a market. Just so you know, we tend to avoid trading in this particular market because when you understand liquidity, when you understand liquidity, you will know the reason why we tend to avoid trading in such markets. Now, this particular type of market is known as the ranging market. This is the special case of the third type of trend we have, the ranging market, in which the market will just be what will just be ranging over and over again. Remember, our uptrend is like this, and our downtrend is like this. Now, a ranging market is like this. in which market will most likely be what? Indecisive. Now, I'll just give you a tip. The reason why we tend to avoid this market is because market is doing what is dumping liquidity on both sides of the market, thereby making it a trap for those trading inside this particular zone. But regardless, I'm thinking to explain it. Now, before I explain this one, I also want to explain a special sub-component of our highs and lows, which are the equal highs and the what? And the equal lows. Now, apart from highs being apart from that differentiation of highs in which form will be an higher high or it will either be an higher or a lower, either an higher high or a lower high, or either an higher low or a lower low. There is also another one again, and this is the equal highs and the equal lows, in which the two highs will be equal and the two lows will be equal. Your chart pattern people regard this as the what? As the double top. So you can see there's an equal level here. Now it doesn't have to be exactly equal. So far it should say they equal small. That's all you need. All right. So that's for the high. Now for the low, just go like this. This case of a low. Please, if your mic is turned on, please turn it off. Thank you. So over here, price reached this level to give us our two equal highs, and over here, price reached this level to give us our two equal lows. So these are your equal lows, for in which price rejects a particular level with almost no difference at all. All right. So now this the formation of like the should I say the sequence of our equal highs and equal low appearing over, like the sequence of it, the progression of it, that's what gives us our what? Our ranging markets, which is this particular market that you see here. It's the sequence of our highs and our lows that give us this what? This ranging market that you are seeing here. These are our equal highs and these are our equal low. Are the ones that give us this particular market. As you can see, equal highs, equal lows. All right. Remember, the one of higher highs, higher lows gave us our what? Our demand trend. Lower lows, lower high gave us our supply trend. Now, equal high and equal low gave us our what? Our ranging market. Or most at times called the consolidation phase, the correction phase, just like that. They have given it many, many names. Or double tops, double bottom, right? So, but regardless, this is just about that. So I just want to explain this particular one for you guys to absolutely grab this one before we move on. So with that said, this is all what we'll be doing in a basic market structure. Now we'll be entering complex market structure. That's the case of the break of structure and the market structure shifts. And we'll be talking about it using the concept of progression. Now, all these things, please and please, sorry that I have to rush class a little bit. You can go back over and over again to actually understand far more better. So now let's talk about our complex market structure. Now, our complex market structure is more or less giving us an insight of how all these things happen live. Because most of the times we are knowing this particular thing so that we can be able to do, so we can be able to identify, we can be able to know it before they actually even start or why the movement is still on. Take for instance, demand trend does not mean that I have to identify this thing first before I know that that's a demand trend. No, it might be that it might just give us just this one and this particular one. All right, but so far it don't give us these two, I will know that yes, we're in a what? We're in a demand trend, and I will know where to enter the market from. So this one is just to show you that particular. That does not mean that you will see it like this in the market at every given point in time. Surely when you are trading, when you start trading live, for those of you already trading, you know what I mean by now, that you will not see all these structures the same way they are, or the same way they are being taught. You will not see them in the charts. Charlie, when you want to trade life, you have to be the one to know that, okay, this is what is going to happen in the world, in the market. So another way that we can actually try to do something like this is by making use of this our complex market structure, in which we try to identify the progression, so know the exact point our market is, and use it to do what, to confirm if whether market is still on that particular trend or not, thereby leading us to our concept of progression. But I cannot talk about the concept of progression without using the concept of sequence alongside. Now, remember, in a demand trend, you want to see sequence of what? Higher highs, higher lows, higher highs, higher lows. Now, for this sequence to actually continue, market, there have to be a progression that is making this particular market to do what? To continue this particular trend. That is making this sequence to do what? To keep on forming in the market. There needs to be a progression that is keeping it intact. All right? Now, in a demand trend, over here, okay, just before that, let me just indicate the supply trend that was in the market before. Now, for a demand trend to actually start, market needs to do something. Market needs to do what? Market needs to change its characteristics of the previous trend. Now, I've given you guys the various characteristics that each trend possess. In which I said the demand trend, what we want to be seeing is the what? The formation of the higher highs and the what? And the higher lows. In the supply trend, what we want to be seeing is the formation of the what? The lower lows and the what? And the lower highs. So, with that being said, market was in a what? Market was in a supply trend before. Market was in a what? Market was in a supply trend before, with this place being our last what? Our last lower high. But something happened ever since markets have been giving us lower highs, but nothing did happen. But this point in time, something did up, something happened. Now, what happened was that this lower IMC market give us price can't do it, price can't break them. Price can't break this lower high. And you know that lower high is associated with supply trend. Now, as price break a lower high, it simply means that price are giving us the formation of a what? Of an higher high. But you yourself, you know very well that whenever there's an higher high, that is a characteristic of the what? Of a demand trend. Now, since this is the characteristics of a demand trend, that simply means that the previous trend is about to go off. This is an indication that a new trend is about to start, which is the demand trend. Markets have shown us that, okay, I don't change character from the lower lows and the lower highs inside the given one before. I don't change character, I don't give an away, I don't print higher high. And by printing this one, that's why we regard it as the what? As the change of character. Change of character is denoted by what? CHOCH. For those of you who don't know about this abbreviation, it means the change of character. And it is also called the market structure shift. All right, so it is either your change of character or your market structure shift. This is the first indication, the first progression that market is about to do what? Market is about to enter a new trend. This is the first thing, the first structural break of the new trend that is about to form. Then afterward, that's when we then see your what? Your break of structure. Now, over here is also a break of structure. Please have that in mind. That over here, this change of character and MSS that we have here, this is a break of structure as well. But since it is the first one, it is the one indicating that this is a market structure shift or a change of character. The first break of structure that you will see in a particular trend. All right, we just do it at this time. We know that okay, yes, this where the trend started from. Then from there on, the next ones we can simply tag them as the what as the break of structure over and over again. As market keep on progressing to that particular trend, we keep on having our break of structures to the what to the upside. So just like that, this first one is our break of structure. This second one is a break of structure, break of structure, break of structure, until market decides to change trend again. The market decides to change trend again. That's why we then say that okay, markets have given us a what? A new market structure shift or a change of character. All right. So this is basically our complex market structure. This one tells you that okay, this is the level that market is right now. If the market just change trend or not. Take for instance, we use the market structure shift as a change of character to indicate that this particular market have changed the particular trend it was before. All right. Now this is a complex market structure. When we get over to advanced market structure, you understand everything much more better because when it comes to the real understanding of the market, we start from the work from the advanced down to the basics. But since you guys are just starting, that's why we're doing what we're taking it from the basics down to the advanced. But when we have gotten to the advanced, that's where everything will be very much clear for you guys about the whole process, the formation of eyes and all that, everything regarding the market, right? So with that said, I think okay, let me just simply go and identify some breakout structures and some market structure shifts in the market. Where is the whatever I identified before? All right. I've already identified some of all this trend before. So let's quickly and sharply identify their breakout structure and market structure shift. So this was the last eye that market gave to us, right? Until market gave us this what? This structure shift to the downside. You can use this low, you can use this low anyway, so you want to use. But let me use this one. Now there must be a close like this one here. I will ignore this one. Unless market close below, if market not close below, that is not a market structure shift. That is not a break of structure. Market must do what? Market must close below it to indicate that yes, market are giving us a break of structure to the downside. So over here we have our MSS. Sorry, I have to just use just one to be faster. Then this is the next one. So over here we have our break of structure. And I think that was the last break of structure we had before market actually did. Okay, let me just identify all these small ones here. Break of structure. break of structure until market give us a what? Give us a new market structure shift at this particular level. Where the market shift into, market have now shift into a what? A demand trend. Just like I explained it for you guys. As you can see what happened, this was the last point the high got so before it gave us this our higher low here. Then price move on just like that, continuing to the upside. So I can tag this one as my what? As my break of structure. This particular market, the trend here is not clear, so I'll just ignore this one. Let's go and look for a sharp one to identify it from. Okay, this is our next higher low. So this was our last break of structure. Before market is before market change trends to the downside here. Okay, we have our market structure shift, break of structure to the downside. Break of structure, until market did what? Change character and give us a what? A market structure shift to the upside at this particular level. So this is our market structure shift. And then this is our break of structure. Now the reason why it's push like this, because I drew it from the higher time frame, remember? That was the daily time frame. This is another break of structure to the upside. I think that was all before the recent price action. And even in this recent price action, you can see your wherever here, you can see your demand trend as well. You can see your demand trend in which we have our market structure shift here. And then we have our break of structure here. A new break of structure at this particular level. So that's it, and that will be all for our class today. So time for those who have questions. Now, please don't ask me question regarding this particular session. Econo, I beg. Anyone have any question before we call it a day?
Okay, sir, I have a question.
Yeah, go on.
Sorry. I think there was a part whereby you identify at that part where you identify a change of character. Now, the internal break, what do we call it?
What I did just now. I did not make mention of anything like eternal break or so.
Okay, sorry.
And please stop making use of eternal break or this or that. You are just using that one to do what? To confuse yourself the more. Simplicity is the key when it comes to trading. If you make things too over complex for yourself, you just like you just enter chat. What you supposed to look for, you not go look for him, they look for other things. That made this thing, that's what you want to say. Take for instance, you mark out your break of structure, your market structure shift and all that. You mark it out on the higher time frame. When you don't mark them out on the higher time frame, the lower time frame, you just need to know that yes, you are in line with the trend. You go over to your lower time frame, look for your recent break of structure, your liquidity and all that, use and enter market and all that. That's what you need. You don't need anything like one thing called internal break or structure, all this or that. No, forget about those ones. Don't make things too complex for yourself. Identify your market structure from an immediate higher time frame. Then go back to your trading time frame. Wherever the market is at that point in time, use it to cash your trade. All right.
Thank you, sir. Thank you very much.
Okay. Anyone have any other question?
My question is
Um,
um my question is which time frame is the best to identify market structure? Is it 4 hours,
um,
one day structure, 15 minutes and 30? Which one is the best?
um, um, well, it depends on you. Depends on you, the trader, which time frame is going to be the best for you. Take for instance, like I said, you want to identify your market structure from the higher time frame. So depend on which time frame is going to be your higher time frame. If the daily time frame is your higher time frame, then you want to identify your break or structure on that daily time frame. All right. Now, if your higher time frame is the 4 hour time frame, you want to identify your break or structure from the 4 hour time frame. If your higher time frame is the 1 hour time frame, you want to identify your break construction from the 1 hour time frame. Now, this is basic market structure. And basic market structure have nothing, absolutely nothing to do with the lower time frame for now. Until we move over to advanced. When you want to be talking about the lower time frame, let me saw those minute time frame like the 30 minutes to 15 minutes and all that. You need advanced market structure, not basic market structure, first of all. So when I'm talking about higher time frame, I don't regard those ones as higher time frame. Higher time frame should be the early time frame. Take for instance in 1 hour, 4 hours, and other 2 hours, 3 hours, 6 hours, 8 hours, 12 hours, then 24 hours, which is the daily time frame. Those are what I regard so as higher time frame. Then if you want to go deeper, weekly time frame, monthly time frame. For those of you who want to swing and all that. All right.
Yeah, thank you. Thank you very much.
All right. So anyone have any other question before we call it a day?
Good evening.
Yeah, good evening.
Yeah, inside, let's say you give us an example of market coming out from the bearish trend into a bullish trend. So if we are to see series of higher highs and higher lows inside the bearish range that hasn't yet broken maybe a market structure shift, how should we treat it?
You cannot be seeing higher highs and higher lows without seeing a market structure shift. When is it that you're in a bearish trend? It's the same thing that I just tell this the person that asked question, I think that was a few minutes ago, that all those ones they are none of your concern. You have your higher time frame and you want to trade doing what? Following the bias of the market. That particular say market structure will give you the directional bias that you need. So that major one, that's the one you want to cash. It's not every move in the market that someone have to cash. You just need to understand the market to some extent and use that particular knowledge that you have to do what to cash the market, but follow your own principle and all that. Just because you see small distance, small movements in the lower time frame before market give you your main break or structure, that does not mean that you should trade against the trend. If you trade against the trend, you will learn in the hard way from the market. At least when you learn 1 or 2 times, or you learn 3, 4, 5, 6, 7, 8 times, better money don't come out from your hand. And when you see such a thing next time, go do it, you gotta avoid them. All right. Trend is actually an important thing. Actually, that's why we say that we always tend to identify all these trends from the higher time frame, because the higher time frame is strong on its own. Then when you're trading in line with the higher time frame, it will be hard for market to go against you. That is why we tend to look for our trend in the higher time frame. And once you don't look for your trend in the higher time frame, say this particular market is on a demand trend. Even if you see your series of lower low, lower highs, lower low, lower highs in the lower time frame, that will not concern you. All right, leave them. Because if you go decide, okay, man, short market, main market, right in that place, the market will give you what? The commission of an higher high. And when that's happen, you don't do it, you don't shop SL. All right?
Yes, I understand. Thank you.
Okay. I think that will be all the questions we'll be taking for tonight. All right, then. Good night, everyone. As for the recording, will be made available very soon.